Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Apple report for Friday. Before I click on all the charts like this one, I just want to encourage you to please click like if you haven't already. It helps us get found on YouTube and others search for Apple analysis. Also, become a Wicked Stocks YouTube channel subscriber. You'll be provided notification each and every time new content has been uploaded for your viewing. That includes the daily Apple and daily Tesla reports, as well as the occasional stock pick that we put on YouTube for free. And check out wickedstocks.com, where we put out 2 individual stock picks every week you never see on YouTube. On Thursday, we put one out on Google or Alphabet. On Monday, Waste Management. We also do daily analysis in the Triple Q, in the SPY, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, all for a very reasonable $47 a month. And we offer a 5-day free trial. So if you sign up, you've got 5 days to cancel and your card will not be hit. So check out wickedstocks.com for some excellent daily and weekly analysis. So here we are. Last week, we settled clearly above 171.18, that long-term channel top. And by clearly, I mean by the required 1% margin. We have certainly hesitated all week long, but that can happen. I'm not discounting the buy signal. I do think that over the next 3 to 5 weeks or so, 182.94 is likely. And over the next 5 to 8 months or so, this rising 217.88 long-term channel top is in play. And that is really the big picture. Let's move on to the day itself. I still have this rising channel top at 175.49. That is just above present price levels. It can contain session strength. We tested it about a week ago. And if we close above it, first of all, that would be expected. It is expected. It's considered an eventuality. And if today shouldn't come as a great surprise, I'm not trying to dissuade aggressive day traders from shorting 175.49. I'm just saying be careful, because if we push through 175.49, 176.15 is likely intraday. And if we close today above 175.49, by Tuesday of next week, I give that 1 to 2 days, we should test 179.36, which is over the next couple of weeks converging anyway with that longer term high, that all-time high from January 22 at 182.94. So closing above 175.49, there's another way of saying this, may well be the sort of indicator that within a couple of weeks, we actually test 182.94. 179.36, though, I will say that if it is tested over the next few days, can contain buying through the balance of next week. And we could fall back to the 175.49 formation. We could trade inside this widening wedge for the better part of a week before then, well, by that point in time, this will have converged with 182.94 anyway. So there you have it. And that kind of covers the upside. 175.49, aggressive day traders can short it. But, if you're already long the market, you could consider unloading some there. It depends on your time frame. If you're a day trader, yes, and you're long, yes, exit some at 175.49. If you're a 3 to 5 day swing trader and you've been holding that position since we closed above 171.18, well, I wouldn't fault you for exiting at 175.49. But if you're more of the 2 to 3 week position and beyond trader, if you reach for 182 out of the money calls, or you're long Apple right now, I'd say just hang tight and be patient, because I think 175.49 is likely to be violated over the next couple of days. Now, downside, we've got nothing but minor points, all very tradable, but none having real clear pivot point qualities. And by pivot point, I mean, does it change the directional course of the day if we violate any of these, say, to the downside? And I don't see it. I think what is resting below, sort of the elephant in the room, if you will, is 171.18, this long-term channel top, which on the daily chart comes in at 170.85. This is your zone to buy, whether you're a day trader, whether you're a 3 to 5 day swing trader back to 175.49, whether you're a 3 to 5 week position trader up to 182.94, so forth and so on. Now, in terms of a rejection of this long-term buy signal, that would come with a settlement today at or below 169.47, which I think is a long shot. But if we did close at or below 169.47, which is a 1% downside violation of 171.18, then we have a clear failed long-term buy signal that is, in essence, a valid sign of weakness as we move into June trade. And under that scenario, I would expect 166.30 156.34 within about 3 to 5 days. And I think within 3 to 5 weeks, we could fall all the way back to the 157.33 channel bottom, where we could actually bottom out into July by that point in time. So that is the dynamic if we close below 171.18 by the 1% margin. Now, what if we close at 170, I don't know, 60 or 170.20? Now, that doesn't look good. I would not fault you for exiting a long position. I think that's not a bad idea because you can always get back on to the upside if the market perks up early next week. But in terms of playing the short side aggressively, that would come with a settlement at 169.47 or lower, because I've seen it so many times where the market slips back below this structure, but by just a marginal degree, not enough to shake off the longs and not enough to actually shift market momentum. That would come once again with a settlement today at 169.47 or lower. And then, yes, I would expect price declines as we move into June trade. But until then, it really is all systems go to the upside for Apple, expecting appreciable gains as we move into later year. And I think that pretty much rounds it out for Friday's Apple. Please click like and subscribe and check out wickedstocks.com. Become an active subscriber. I will talk to you Sunday afternoon with Monday's Apple Report, and you have a great weekend.